Today we are joined by Peter Cardillo, the Chief Market Economist at Spartan Capital Securities LLC, to talk to us more about the Fed rates. What is his understanding coming in of the hikes as well? Very good morning, Peter, and I'm going to dive right in and talk about the 75 basis point hike that the Fed has taken. Now, this was discounted in the market. What do you make of the new terminal rates given by the FOMC?
Well, there's no doubt that the Fed made a bold move here and raised by 75 basis points, although it was pretty much priced in the markets. But, they are determined to lower inflation. And I suspect that, if we don't see a cooling off of inflation by July, then the next move probably will be another 75 basis points. But I think they're going to want to also look at something that they always look at, and that is the PCE. Now, it's very true that we saw the CPI and the PPI where inflation just continued to grow. But if we see on an annual basis that the inflation measured by the PCE remains unchanged, then I think the chances of a 50 basis points hike in July becomes more of a probability. But for now, until we see inflation cool off a bit, the Fed is determined to bring down inflation, and they're going to stay aggressive.
Peter, but in terms of last time when US saw such an inflation at 8.6% was 40 years ago. That time the Fed fund rate was around 13%. Now it's merely 1.5, 1.75 range. So how much more do you think will be required to control the inflation? You said you see it cooling off a bit, but does this require more hikes? Because last time it was 13% when we saw such high inflation coming in.
Yes. Well, if we make a comparison, obviously things were quite different then, and now we're coming off from basically zero interest rates, and so just getting the rates back to normality certainly is not a lot, but because of several years of near zero interest rates, it seems a lot. And, of course, the consequences are probably that we're going to wind up in a recession. I don't think that the recession is going to be severe. I think it'll be a mild one. But I just don't see the Fed reducing their balance sheet, combating inflation at the same time without crippling the economy.
Peter, I do want to talk about one thing is that, as of now, when you saw the U.S. markets post the Fed chair's announcement coming in, it had seen a positive move coming in. Now, do you see that lasting for the market? How do you see the markets moving now on?
Well, I think at least for the near term, the Fed have appeased the market. The markets wanted tough talk from the Fed, and they got it. They want an aggressive Fed, and they're getting one. And that's because the Fed, the market is looking forward and wants inflation to come down. Of course, it causes near-term pain. There's no question about it. And with the markets, with the indices being in bear market territory, I suspect that, what we saw happened yesterday and what's probably going to happen today will get relief rallies, but I don't think that, we're going to see an end to this bear market until we get some sort of indication that the Fed's policy is beginning to work and bring down inflation.
Okay, right, Peter. So not an end to the bear market anytime soon, but in terms of emerging markets, what is the outlook coming in over there? Look at the US dollar. That index is at 105. Where do you see that moving? Because that is one of the major factors that is moving the needle for the emerging markets as well.
Well, yeah, a lot depends on what happens to the price of oil over the next several weeks. And I think we'll probably see oil get up to about 125. But I think as we move into the summer months, we're going to see less appetite. And I say less appetite for driving and things of that nature. So less usage of energy because prices are so high. And if that happens, then we should begin to see this transitory inflation come down. Because I really believe that structural inflation has peaked. The problem is the transitory inflation.
Right, that was Peter Cardillo, of course. Many thanks for being with us at the top of 7 a.m.